Be up in YouTube if anyone can copy and paste the link. It is 11 after 4, so I'm going to get started. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here's my position disclosure here. I added on a bunch of long positions, a bunch of new exposure, really primarily last week. And then I added to some of the positions that I was already in today. Okay. So, first, I guess, by popular demand, I'll tell the quick story about how I once found myself selling magic rings at the base of the Great Wall of China. I'll keep it quick, just because people are asking about it. So I think it was the first time I went to China. I got to see Beijing, and the people that I was with took me to the Great Wall of China. And when I first got to the Great Wall of China, I honestly thought it was like the worst place I've ever been to in my life. And look, I've had such great experiences in China overall, but I got to the Great Wall of China and it was just so crowded. And it was like a hot summer sunny day. So, you know, all the women, they have the umbrellas to protect themselves from the sun. And I remember just trying to go up these like battered steps of the Great Wall of China, just being surrounded by like a million people, and all these people, predominantly women, are holding up umbrellas to keep themselves shielded from the sun. But I'm also a little bit taller than everyone, so they're all holding them like my eye level. I remember like batting off like umbrellas and just thinking, oh my god, I can't wait to get out of here, like this is awful. But then eventually we walked far enough. We ended up walking really far, that eventually we got away from all the people. And then once we got away from the people, it was awesome. It was just a really cool experience. And then eventually we found like an illegal beer cellar somewhere on the wall as well. So we're buying beers, we're drinking beers, walking around on the Great Wall of China. Like it turned into being a super cool experience. But eventually when we kind of left, we left like at the wrong spot. Great Wall of China is pretty great and pretty long, if you weren't aware of that. So we didn't leave where we entered, and then we had exited the area, and like they would have wanted you to pay to go back in again or something. And you know, we were like super far away from our car, so we had to call, I guess, like an Uber or a Didi maybe or something like that, to get us to give us a ride all the way back to wherever it was that we had originally parked. And I don't speak Chinese. I've been trying to learn. I'm not very good, but at that time I didn't even speak a single word. But one of my friends who I was with, we were having trouble locating the Uber, who I guess was supposed to be there. And one of the friends I was with just starts talking to like one of these street vendors who was there. And whatever, you know, they're talking, and then the street vendor just runs off. I'm like, what's going on? And he was like, oh, he was nice enough to volunteer to go and like help find the Uber. Like, I'll be right back. And me and kind of one other guy were left to be responsible for this guy's business, because he was helping us to try to locate our Uber. So now I'm standing there, and the business is like selling these like magic rings and magic cards and stuff like that. And I guess what he would do is he would show people the magic trick of how to put these two like steel rings and snap them together or whatever through it, and then you could buy your own. And he would stand there doing the trick. But you know, he ran off and didn't tell me how to do the trick. So I'm standing there, and in my brain I'm like, man, this guy is really nice. You know, he's doing us a favor. So I want to try to do one right for him. So let me see if I can try to sell something for him while he's gone, even though I don't speak a word of the local language or anything like that. So I'm standing there holding these magic rings, like clicking them together, even though I can't get them to to come into each other because I don't know how the trick works, and I'm just yelling at people like in English, like, oh, magic rings for sale. But I figured, maybe if I just look like a crazy white guy like selling magic rings at the Great Wall of China, it'll be a big enough of an ado where people will be interested and come over and buy stuff. So I'm standing there just like, banging these rings together. I'm like, you can do it too. See, look. And then they're together. Oh, I had a set that were already together, and I had a set that were separate. So I would bang the two together that were separate and be like, look, and then they become like this. And I would pull the ones out that were already all together. And, people were stopping, but I couldn't get anybody to buy any. And then eventually I got a sale. Eventually some kid comes up and, decides to buy some and leaves. I made the purchase, made the sale. And, like 10 minutes later, he comes back with his mom. Like, and again, language barrier, but they're like, you didn't teach him the trick. But I didn't know the trick. And then luckily, yeah, exactly, Mark, those things. And then luckily, right as I was like about to have to give this person their money back because I didn't even know how to do it, the person who actually ran the desk there came back and completed the sale and showed him how to do it and showed me how to do it too. So now I know magic, and that is how I once sold magic rings at the base of the Great Wall of China. No, I don't actually have any. Sorry, Felipe. All right. Let's story time is over. Let's talk about markets. What a day today, right? S&P is up about 0.6%. NASDAQ is up a percentage point, and Russell did close as our leader. They lost leadership at 1 point today. Russell closed up 1.25%. Today was, so first of all, this market looks incredibly bullish. I guess I'll start by saying that. We discussed in the morning meeting, I have the SPY daily chart up right now. This SPY daily chart looks phenomenally bullish. It looked even more bullish than either the NASDAQ or the Russell coming into today. So first of all, I talked about this in the morning meeting, but I'll just recap it. On Monday, December 20th, we had this big gap down in the SPYs. SPYs put in a low of about 451. Now we're almost at 480, right? And that was the day we gapped down on Omicron fears. That was also the day when the Build Back Better program from Joe Biden was getting delayed or not passing or whatever. And I remember really telling everybody that we should be looking to buy on this. And it was more of a thesis than having technicals at this point, though there was technical support at 450. I had strong conviction in my thesis that the market was a buy on that dip. And I remember intraday they made it really difficult actually to be able to get stock off that low. That low was very non-eventful. It was like in the middle of the day. We just kind of rounded up on no volume. But we ended up closing with a good-looking hammer here. And then it was actually the following day on Tuesday, even though we gapped up pretty big, and normally I don't like, chasing those gap ups, that was the day when I was like also really bullish, and that turned into, I think, the easier opportunity to do a lot of buying. And I remember in the afternoon meeting on the 21st, so it's like almost 2 weeks ago now, telling everybody, like, I just want everybody to realize that the market's been difficult here for almost 2 months. And it's a difficult environment, but you got to recognize when the opportunities are there, because this was such a huge 2-day buying opportunity that this 2 days worth of buying that you could do in here and then hold things for a swing position because the market's closing so well. And I literally said that afternoon, we might end up looking back another week from now and realizing that this is just like a huge buying opportunity. And that's exactly what happened. The follow through the next 3 days was phenomenal. We ended up getting 5 big days in a row here, kind of off this low. Though the Wednesday, Thursday, and Friday became more difficult to make the buys because we were starting to get extended to the upside, especially by that was Monday. So the Tuesday, Wednesday, Thursday. I think I'm slightly off here. I think this was a Tuesday, Wednesday, Thursday, Friday, and then Monday last week was the final big day of the rally that we had here. So, but even Monday last week was difficult to do a lot of buying because of where we had just came from. So it was these 2 trading sessions. It was the 20th and 21st, that you really got paid dividends days later for the work that you had done on those days. And that's how the market is a lot of the times. A lot of times you get some tougher trading sessions, but then you get this opportunity, and if you can execute properly in that opportunity, it sets you up for just continued profits off of those days' work for days, weeks, honestly, sometimes even months. And that's really what I thought that was, and that's kind of what it's turned into. Now, after these 5 big up days in a row here, the market we know is very extended. So markets that are extended, a market that's extended, let's just review some basics here. A market that is extended, first of all, can always become more extended, right? So you should never look at a stock or a market and say, it's up too much, it has to come down. But you can look at a stock or a market that's up a lot and say, it's up too much for me to buy. So there's a big difference between saying, hey, it's up too much, so it has to come down and I'm going to short, and you can get run over by further momentum, versus saying, wow, it's up too much, I can't buy responsibly. I can't buy responsibly here. There was no setup on Monday to come in and buy the market or anything that looks like the market and have a good risk reward at that point. There's no pivot, there's no level, there's just nowhere to give it to. It was just straight up. And now at this point, the market's extended. How do I measure extension in the market? I measure extension in the market by where the market is trading versus the space between the 8 and 21 EMA. The 8 EMA is what I consider to be the upper band of technical equilibrium. The 21 EMA is what I consider to be the lower band of technical equilibrium. So if I've got my my market here making a high and basically closing at highs, 477.31, I got my 8 EMA at 468, then we could say that the market was extended. I would say that the market is extended by the market is extended from its upper band of equilibrium by $9 at the close of that day, and even more from the lower band of equilibrium. So that's the way I measure extension. And again, maybe we had another big up day and another big up day and that Santa Claus rally or whatever, even though people quote that incorrectly all the time, continues, and the market kind of keeps going up here. Sure, fine, but you're not buying this day responsibly for anything more than a very short-term day trade. So markets that are extended, even though they can become more extended, they can't continue to do that. The rise that the SPYs here had from going from 451 to 477.50 in 5 days, you can't just double that again and double that again and double that again, and every 5 days you're going up $25. It's just impossible, right? The market would go completely parabolic, become super extended, and that's when we get like our euphoric blow off top type situations. But what's more probable is when the market becomes extended, that it either time or price corrects. A price correction is when the market moves back down into equilibrium, and then maybe there it makes a higher low and gives you continuation. A time correction is when the market moves sideways. A bull flag is an example of a time correction. The market moves sideways and the moving averages catch up to it. Instead of the market moving down to the moving averages, to that equilibrium area moves up to it. So what did we get? The whole back half of last week, even more than that, last 4 days last week, the SPYs just time corrected. Underneath the surface of it on Thursday was actually a big day for spec stocks. I mentioned that in the morning meeting as well. But overall, the SPYs spent 4 days going sideways here, just time correcting, allowing this 8 EMA to catch up and forming a bull flag at all-time highs. It doesn't get much more bullish technically than that. And now coming into today, the 8 EMA had caught up to price action. So that's usually when you're going to start looking for your continuation. So there was a lot of reasons to think that the market would be on your side if you look for longs today. The next question, though, was where do I look for the longs? My thought process coming into today, and I'll take a look at the Qs and the IW in a second, my thought process coming into today, based on Thursday's price action, was that we were actually going to see real continuation in spec stocks. It didn't actually end up being true. The buying was very broad-based, but it was also kind of interesting. And I don't know if it has to do, I know Pat was speculating that maybe it had to do with it just being the first day of the year, so there's a lot of fund repositioning going on. But, you had some spec stocks performing really well, others really weak at the open. But then you had like Apple being super strong. Tesla, we know, had news that was super strong. I don't want to talk about Tesla yet. I'll talk about Tesla in a second. That was one of my ideas for the day today. But you had like Apple being super strong, and you had Microsoft acting super weak. They usually trade somewhat in conjunction with each other. So, kind of coming into today, it was like, all right, this market's looking great. We had 4 days of time correction here. It's probably time to start doing some buying again, right? We were doing our buying ideally. If you're big picture, you hold swing positions, and like even if you're a day trader, and I'm in some ways I'm like a day trader who just always swings positions, because I think that if you're a pure day trader, it's actually reward limiting, right? Like maybe you caught the bottom in SPYs and you're only a day trader, so you got out by the end of the day here on the 20th, and then you missed all this upside. Or maybe you caught Tuesday and you closed out because you're only a day trader and you missed all this upside. So I love putting myself, I think as everyone knows, in what I call a win-win situation. Meaning I buy this stock, maybe it starts as a day trade, but it closes just really, really well. So the risk reward now makes sense. Why not swing 10 to 50% of the position, be willing to give it back to my original stop loss, to now potentially make daily chart reward. That's how we go from intraday risk to making daily chart reward, and that's how you really maximize your reward ratios for the risk that you took on, is by keeping those positions overnight, but doing it from a win-win. I am not an advocate of, you took on a day trade and now the position's against you, and then you know what, I'm just going to keep it overnight and hope and pray that it comes back and saves my butt. We don't want to do that. We want to be in these win-win situations and look for further continuation. And that really, if you have that thought process, these were some great entry days over here on the 20th and the 21st. The next 3 days, even though they continued higher, you're just continuing to get paid based on your success from the 20th and the 21st. Hard to enter new big picture positions here. Maybe you put on some day trades and they closed well enough that you say, you know what, I'll just keep it. But then we're extended here. Now we get this time correction for 4 days. ADMA finally catches up, and it looks like if we get confirmation internally from the market that today could be a good day again to be thinking big picture for big picture ads for big picture trades. So I was kind of excited about today's trading session to see what could happen, and we ended up having a good day, but the intraday action was really thin at certain points. I don't know if that also has to do with the new year or what it was, but we had some real whipsaw price action intraday today, and the market seemed like less liquid. It really seemed thinner, and I don't really know why that is. I could just see it, feel it, see it in the volatility of the positions that I was in, where we were getting kind of these movements. But at the end of the day, all's well that ends well, and we close really strong. Look at the intraday on the SPYs here, and again, I still want to bring up the Qs and the IWM. We had a common gap higher, so this is Friday's price action, right? This is today. This is 9:30 a.m. right here on this green bar. We had our common gap higher. We traded up. We got extended to the upside in the small time frame, and we pulled back, and that's fine because that concept of extension and correction, time or price correction, that occurs on multiple time frames. But when you get this great looking opening momentum and the daily charts look so good, you really don't want to see this opening low break. And then what happened? We got what was the economic number this morning? I already forget. PPI? I don't even remember. But it was like an inline number, and it's usually not like a super market moving number. But it was mainly in line, maybe a tiny miss. I don't know if that's what caused the sell-off. I don't know if it was just robots gone wild or what it was. But man, this bar was brutal for all the indices, but particularly the NASDAQ. SPYs were bad also. But they just, on this fourth 5-minute bar of the day here at 9:45 when that number hit, they just destroyed this market. But this goes back to like the lack of liquidity that I really noticed today. And the bar after that closes, which is kind of a crazy doji type of candle. I was actually communicating, and I'm trying to stick with the SPYs for the moment. I was actually communicating. I thought that this IWM actually held in really well, and the bar after the sell-off bar was so strong. I thought that this IWM was going to give continuation. The Russell was the most relatively strong at the beginning of the day. Sell-off occurred. The snapback here in the Russell looked phenomenal. I was really happy with this opening price action in the IWM today. Especially, and then 10 a.m. comes when we're making new highs, as opposed to the NASDAQ was the worst. This 9:45 a.m. candle was brutal, also opening low is breaking, but then on the bar after that, when the IWM is snapping back really well, and the SPYs are giving this crazy doji, this thing gave another really weak bar. And I was like, okay, this is interesting. Loving what this Russell's looking like, but in the back of my brain, how many times in the last couple of months have we seen the Russell try to be strong and then the NASDAQ have a weak day, and then that selling then just eventually leads to a sell-off in the IWM, and the next thing you know, everything is selling off. So I'm like, the Russell looks fantastic. The SPYs look okay. Q's kind of scary here. A little bit worried that this could bring down the rest of the market. Then I'm typing up stocks, and I'm like, Apple looks phenomenal. Apple looks phenomenal. The first 3 bars of the day were fantastic. The pullback was barely a technical price correction to the ADMA, followed by a continuation hammer. I'm like, all right, I'm worried about the Q's, but Apple looks phenomenal. But then I type up Microsoft, and Microsoft just is like, even when the other indices and even when the Q's here, are trying to look a little bit better, like Microsoft look awful. Just really weird to see Apple looking so good and Microsoft looking so bad at the same time. We don't really see that often, and that was kind of happening across the board. You almost felt like you could type up any sector except maybe the financials. The financials were phenomenal, and that was Bank of America was probably the team trade of the day today. Financials are phenomenal, but it seemed like you could type up almost any other sector and find almost like what we had here with Apple and Microsoft, which is definitely unusual, but maybe it just has to do with it being the first day of the new year. Back to the SPYs, though. So when you get a negative candle like this, that's this heavy of like a Maribozu, the upper portion of that candle is really important. Because if you can get back above it, then it negates it. It is noticeable, though, and this maybe goes back to the illiquidity of the market that I keep referencing. Look at the size of this candle versus the volume traded on it. The volume traded on this candle is really small, considering what this candle did. The huge range negative Maribozu on volume that's this kind of petty. Interesting. Also interesting. So just one of several kind of weird, notable things that happened with the market today. But you always want to negate that high of this type of candle, especially if it's high volume, which this one was not, because that puts all those people out of the money, and then it becomes easier for the market to give continuation. Well, the Russell did it within like 5 minutes, 10 minutes. SPYs were looking better, but they looked like they were going to be a struggle. It was not surprising at all to me to see that they were able to snap back like 3/4 or whatever of that sell-off and then find resistance but not be able to negate the candle and then, roll over a little bit here at 11:30. But then by the end of the day, we were able to get above that and close at new highs in the day for the SPYs. So really kind of incredible. And then the IWM, which was so beautiful here, out of nowhere in the middle of the day becomes relatively weak as the NASDAQ starts grinding, right? Grinding a little bit. Same thing. NASDAQ ends up having a pretty interesting snapback here, looking so weak. Microsoft looking so weak, but you got Apple and Tesla. Apple and Tesla really managing to hold hold the Qs up, probably hold the SPYs up as well. But same thing, making a pivot high in front of the high of the negative Maribozu candlestick that was a little bit on higher volume for the Qs. Not surprising at all. But then that upside grind kind of continued. They eventually recaptured that on a nice little bar here at 140 and closing incredibly well. And at the end of the day, you got the NASDAQ up a percentage point, then you got the Russell, which was so strong, and then kind of disappointingly weak midday for no apparent reason. This pullback was more than I would like, to then round back up again. I did note to the team here when the Russell was at highs that it was at this 226 daily resistance, which was cause for some concern. So not surprising. Maybe the degree of the pullback was just because the 226 resistance is so strong. We can see its resistance here going back to, I guess this resistance going back to the day after Thanksgiving, right? Which is when we had that initial sell-off when Omicron was kind of first coming to the forefront of the news. So 226. It's interesting that we haven't recaptured that. We haven't fully recaptured Omicron for the IWM. But yeah, 226 resistance here. The level created on the Friday after Thanksgiving. Further confirmed by this initial bounce back that we had in early December. Further confirmed with a upside tail last week after the big 5-day bounce. Further confirmed on Thursday of last week. And then even further confirmed today. That was a much better day for the IWM. We still need to see this IWM get above 226 and hold above 226. So I guess to sum up here for our indices, we're still looking really good. It's a great start to the year. Markets are up big today. SPYs look beautiful. Beautiful daily bull flag for the SPYs. Qs gave the close above $400 that I mentioned I wanted to see in the morning meeting today. I liked the Q pattern as well as the SPY pattern, but I thought that the SPY pattern looked better because the Qs had time corrected in addition, had price corrected in addition to time correcting. So the SPYs just very tightly went sideways, whereas the Qs pulled in as they went sideways. So a little bit of relative weakness there, but same thing, moving averages caught up after consolidation of the strong move. So I wanted to see if we can get a bounce today for the NASDAQ and get a close above $400. We got it. And then the IWM, this 226, we still don't have a close above 226. But IWM is the leader today, closing up 1.25%. So overall markets are looking really good, and we'll see what kind of continuation we can get. As far as trades go, so everything was broadly strong today. I would say it was a little bit of a mixed bag on some of the morning meeting callouts today. Some of them worked out really well. Some of them were just kind of okay, and some of them never even triggered, which is interesting considering, that some things were looking so good and other things were not. Tesla I had mentioned in the morning meeting as a long versus $1,100. The gap up may have been too big to be able to get stock even on the opening pullback versus 1,100. So if anybody was able to get some, you're kind of really paying up. I actually don't think that it was easy to get stock intraday on Tesla unless you were kind of buying it pre-market. When I first wrote down Tesla long versus $1,100 in my notes, Tesla was trading much closer to $1,100. It might have been like $10 worth of risk or something like that. But by the time we were doing the morning meeting, it was like working its way up to almost 1140, which I felt just was becoming a little bit too much risk versus that. But if anybody was able to capture it, Tesla just a beacon of strength today. Apple, I didn't add to Apple today, though Apple gave opportunities. I still have an Apple swing. I had exited that Apple swing, and I started to re-enter it a little bit. Thursday, Friday last week, small, because I saw the bull flag building out, and it's Apple, right? So I sold some of that Apple on the way up. I didn't take this buy here. If anyone was looking at Apple, I communicated it. This Apple candle here at 9:50 a.m., that's just a great intraday candle to be able to execute Apple off of. So that one was pretty solid. But Bank of America, I think Felipe and Josh and someone else, like you had multiple people here in the VTF were saying, Bank of America, my number one idea of the day today. I know Pat really liked the banks as well. He decided to focus more on JP Morgan for 160. So that was a phenomenal trade of the day today as well. TLT was down a lot today, so interest rates were up. So that obviously helps the banks. But yeah, BAC, $45 was the trade. And I think I even said right at the open, I was like, all right, it's at 45.13. I'm nervous to go long versus 44.98 because I feel like it's too tight. But I think, and then I was like, you know what? I think you could just take it anyway. And then, maybe give some a little bit more room down to like Friday's high, and some you can keep a little bit tighter. And it sounds like a bunch of you guys were able to scoop up stock. This Bank of America was phenomenal. Maybe some of you guys took JP Morgan with Pat. Pat's call out for JP Morgan was the 160 level buy. Very similar trade to BAC, just a more expensive stock. also gave great follow through. Financials were great today. XLE was great today. That Oxy that a lot of us have been stalking was great today. So all really good stuff. Some other things were, a little bit more disappointing. Some things never triggered. So I had been looking to see some of these spec stocks that gave that great day on Thursday and then rested on Friday could give continuation today. I really liked how the spec stocks, you look at the daily candle here, the SPYs, they were so weak. The SPYs were weak on Friday. I guess it was still part of the time correction, but they were weak. And those spec names, a lot of them had really big up moves. So I'm in DKNG from Thursday last week. I'm in Peloton. So I'm in Peloton versus near lows, 34.50 something or whatever in Peloton. Beautiful day on there, followed by an inside day. I was looking for continuation on that. It never triggered, so there was no entry today. There was no add today in this thing. It actually broke to the downside, so that one ended up being kind of weak. DKNG never triggered either. That one I'm still in from near Thursday's low as well. Roblox I'm still in from Thursday also. This one was also relatively weak today. This one was not on the game plan for a buy today. It didn't have that same setup that I was really liking from some of the other ones. But some of the other ones were kind of okay. Triple D was able to trigger a little bit. I know that got brought up in the morning meeting. Same kind of pattern, really strong on Thursday, inside day on Friday. And then the other thought process I had was that even though these names didn't have their catalyst, and PayPal, we were talking about 193. The problem with PayPal is just when that 193 triggered. 193 triggered at not a great time. I don't think 10:20, 10:25 at that point. I want these to be going in the first hour of the day. But if anyone did take that 193 buy in PayPal, if you didn't get shaken out on this little pullback, the PayPal was also a really good move. And PayPal did have an upgrade. But basically I'm looking for like a January effect play on these, which is basically, they oversell because of tax loss harvesting the most weak stocks into the end of the year. And then sometimes those can catch the best bid in January and early January because then that tax loss harvesting money kind of comes back into them. So that's what I was looking for, but, they weren't great. Some of them were disappointing. Neo was another one that I had brought up in the morning meeting. The thing about Neo, I really like this setup because it also did, it was like the strongest of the beaten up spec stocks on Thursday, gave the same rest day on Friday. So I like 33 for Neo. But the issue with Neo, and it's interesting because Tesla performed so well on their car sale numbers, we have very consistently seen, and I said this in the morning meeting, with the EV makers, these Chinese EV makers, that when they report their car sale numbers, that has very consistently been a sell the news type of event. So I mentioned $33 in Neo for a trade today, but I also mentioned we got to be a little bit careful because of how often we've seen that be a sell the news type of event. And they sold that Neo very hard, very fast in the first 5-minute bar of the day. So then when I saw that, I was like, all right, maybe there's a trade here when the short-term equilibrium can catch up a little bit, but I don't like this price action here at all. They're selling the car numbers like they always do, but look what the SPYs are doing at the same time. Look what the Qs are doing at the same time. Look what the IWM is doing at the same time. So I ended up never actually getting involved in Neo, even though it actually closed okay, and I like the idea and I like the company. But it's interesting that they could buy up the Tesla numbers so well when they always seem to sell those numbers for the the other EV companies, particularly the Chinese EV companies. So that's pretty much it. There is an absolutely gorgeous sunset right now coming down over the Statue of Liberty. Probably the only thing I will ever miss about coming to an office. All right, so with that said, I am happy to take a look at whatever you guys are looking at and whatever names you guys want me to take a look at. Josh, I've been bringing stuff home that's at my desk here very slowly. We sued to sell packaged cordless phones. Yeah. I was selling real magic though, Zahor. I wasn't selling fake phones. I was selling real magic. First I think I'm seeing is from Jerry here. In trying to develop a trading plan going forward, is it a good idea for newer traders to focus on just a couple technical setups? For example, focus to trade inside candles at the open if stock fulfills at least 5 out of 7 of our probability factors. Yeah, I like that idea a lot, Jerry. So I think in the long run, to be a successful trader, you can't just have like 1 or 2 trades, because the market environment's constantly changing. And when the market environment changes, maybe that trade doesn't work anymore. And if that trade doesn't work anymore, then you're in a bad spot. So you want to learn to be able to diversify your approach to be able to have something for whatever the market environment is. But if you're a new trader, you want to focus on, I think, just having a couple trades and really learning those in and out. I think a breakout is just a great first trade for a new trader to learn. That's why it's part of the first class in my training program that I have, is support, resistance, breakouts, breakdowns. I love the breakout trade. It's very simple, but it's effective. You find the daily chart levels, you execute them on a 5 or 15-minute chart when you have the other layers of probability that are coming together. Utilizing the inside 5 execution setup that you're discussing here can definitely be another one. I think that one's actually a little bit trickier, because the breakout trade is like a trade in and of itself, as opposed to the inside bar trade. You can't take every single inside bar trade and expect to be profitable, right? Which we've spoken about. You really, really have to have those other layers of probability. So I think that it's a little bit more complex, which doesn't mean that it's wrong to focus on that initially. You can, or maybe both. You know, maybe you start as a new trader really focusing on your breakout trades, because it's been a good, consistent one. It's an easier one to learn, but it's yet still effective. And then you also build in an understanding of, you know, the inside bar technical setup and your layers of probability, and understanding those layers of probability and executing them properly. So yeah, for sure, I like it. Next here from Chinggis. I wanted to clarify a question from the previous meeting. It's been a while since I did a meeting. Maybe mean the morning meeting. I was still not clear. You mentioned in the $28 stock, 50 cents risk is a lot because it was almost 2% of the stock price. How do you determine that is a lot? Is it based on daily price move of that stock? So if it moves 2% or more in the day, then that's a lot. Am I missing something? Sure. So this is a little bit more art than science, is the answer to your question here. Why is 2%, if you're risking 2% on a position that you put on, why is that a lot? Because can you make 6%, 8% intraday for your risk? Very hard. And it depends a little bit on the name. And it depends if there's news. Sometimes it might be okay to risk 50 cents in a $28 stock. A lot of times it might be too much. It's just a lot of space for a cheap name. But it also really depends on the stock. You know, if you're buying like Bank of America, which I know had a great day today, versus you're buying some crazy, you know, LCID, DWAC spec stock, you can expect a lot more of movement from that crazy stock, where maybe 50 cents is worth it for LCID, but not worth it for Bank of America. So it depends a bit on the name. You could do what you're suggesting here, which is look at like an average true range. Basically, you're saying, you know, when you're saying like the daily price move that the stock provides, basically what you're referencing is what's called the stock's ATR, or average true range, how much it moves in a typical day. I think that's usually based on a 3-month time frame. I don't like looking at ATR because I don't want to be trading stocks on their typical day for the most part, right? So I find that ATR can be limiting. If I look at a stock and it has an average ATR of 75 cents, well then yeah, you know what, you're right, or even $1, then yeah, you're right. I don't want to risk 50 cents in a stock that on an average day only moves $1. But I prefer, if I'm really trading these names properly, to be trading them on the day where there was news or on the day where there's a technical break. So then maybe if the stock's average day is $1, today's a huge outlier day where it could move $2.50. That's the day I want to be trading the stock. And then maybe 50 cents is worth it. So I don't like looking at the ATR statistic because I think it can be really deceiving, which then, of course, makes it difficult to know and properly answer your question of what the appropriate risk is. And that's why I started by answering the question by saying it's a little bit more art than science. You understand generally the type of stock that you're trading. Is it a Bank of America or is it an LCID? Then you understand, is there a catalyst to that name that could make it worth more risk-wise than it typically would be on another day? And you kind of put all that together to then make a decision on whether or not this risk is worth taking for this trade from a potential risk-reward perspective. Hope that helps. Next from Holden, thoughts on Procter Gamble in the great state of Ohio. Great candle this PG put in today. Defensive name. This thing has been incredible how well this stock has been holding up. You know, this thing started as a fear trade here for sure in this first half of December, and now it's just continuing along with everything else. Great looking daily candle here for PG. Yeah, pick up on volume, and this is a continuation hammer. You want this 160 to be a pivot that was similar to this pivot here at 156.57. You want this to be the low that leads to, you know, trend continuing this next movement here, right? The next kind of wave higher. You want this to be the low that leads to a move to 170. I struggle to trade Procter & Gamble actively. I know if you've been involved in it and focused on it for the last month, it's been a heck of a move. But traditionally, this is not like a real mover that you want to be a short-term trader and focused on. It's a safety trade. It's a dividend play. It's toilet paper. You want to have it in your IRA, I think. Full disclosure, you know, I am a buy and hold investor in Procter & Gamble for like literally my retirement account. So yeah, I mean, I don't know. I struggle to actively trade this one, but it's been trading phenomenally well. And yeah, maybe this is the pivot that leads to that next move higher. Yeah, Ford. I didn't mention Ford in my part of the meeting, but Ford, I know you guys have been stalking this Ford very consistently, and I haven't been involved in it, but a bunch of you guys have been stalking it, and congratulations, you got your move today. You know, phenomenal breakaway gap here above 21, closed really well. Congrats to the people on the team who caught Ford. I know a bunch of you guys have been stalking it. PMI at 945. Thanks, Christian. Next from Mark. I mentioned in the room today about Oracle coming into the 200 SMA. Yeah. I wouldn't blindly buy it because of this, but I didn't see a capitulation entry. Do you see a trade that I should have taken? So first of all, I agree with one of your comments there about not buying just because it's touching a moving average, whether it's the 200-day or any other moving average. Yes, the 200-day is a powerful moving average, but it's still just a squiggly line. It doesn't necessarily mean anything. It's not support. But sure, you have a company that you like or whatever, or a good technical setup, and it's, you know, coming into the 200-day for the first time, that can be an extra layer of probability on your side for the trade. I would not have been involved in this. I wouldn't even have been looking at this thing after the first 15 minutes of the day. I do not like this weakness here early on, right? And then obviously the whole market gets wrecked. We went over that at 9:45. But look at the relative weakness in the first three bars of the day compared to what the Qs are doing, compared to what the SPYs are doing. I'm not coming in, I'm trying to bottom pick, not Qualcomm. I'm not coming in trying to bottom pick Oracle today into its 200-day with no catalyst. And I agree with you. I don't see any downside capitulation. When it finally does put in its low, it puts it in at an awkward time, and then it kind of just catches a bid. So I think it was the right call to not be involved in Oracle, despite the fact that it put in a decent bottom through that 200-day and closed well today. Next from Sebastian, What do I think of a trade on Neo at 1050? Okay, we looked at Neo already. This one went back through 33. Yeah, this one went back through 33. Ended up holding a bit for tomorrow. Can I give some comments? Sure. So, I think it closed really well. I like the company. So I like that you were able to capture that stock. I don't think personally that's where I would put my money to risk. Like I mentioned earlier, I didn't like that opening relative weakness. And yeah, it's coming back to 33, but now it's doing it at 11 a.m. And I don't feel confident that the spies or the Qs are going to be able to recapture that 9:45 a.m. negative Mariposa candlestick. So I don't necessarily believe I have those indices on my side, but the IWM looks really good. So I don't know. I don't love your buy. Even though it's a solid level here, you did nothing wrong. I just don't think that there was enough on the side of the trade that would have gotten me involved in it. But it worked, and I like the company, and I do think that the daily looks really good still. And it closed strong. So definitely, if you did take the trade and it closed where it closed, I fully support and like the idea that you're keeping some. Who's up one? How much does extended hours factor into your trading for the day? Not a ton, necessarily. In earnings season, after hours pre-market price action, if the stock is trading heavily on it, is really important to me, and the levels that it creates. And, pre-market, I am constantly watching the pre-market price action. But for most of the stocks that are out there, they're too illiquid, where there's just not enough trading that's occurring pre-market or post-market that makes it worth it to even look at. And even for the SPYs and the Qs, for the most part, there's just things to reference pre- and post-market. I'm not really factoring in, my game plan around it necessarily. Though sometimes you'll get a situation in the market, or like what we got in Tesla today, where I love my setup, and then by the time the market's opening, the setup is gone. And I will sometimes enter positions pre- and post-market if I've got the volume to make it worth it. And you had that for Tesla. You could have gotten involved in Tesla earlier this morning. I was looking at Tesla below 1130 for sure, in this 1125 area, like 830. And I was like, if it could open up in this area, I would love it. Sometimes I'll nibble on this. The volume was good enough, I think, pre-market, that you could have gotten involved, but I don't love trading Tesla to begin with because of how expensive it is. So I'm really cautious on being involved in this name. And then by the time it opened, I just thought it opened a little bit too high. But yeah, it's definitely something I pay attention to, but it's not the end-all be-all. And I think it's very easy for traders to actually overanalyze the pre-market price action, when a lot of times it's not important because you didn't have the volume that makes it substantial. And from Gabriel here, thoughts on Square and Palantir for January effect? They had some option flow today. Yeah, they're on the list for sure. Square, these all had the setup, but they just didn't trigger. So Square, I'm interested in Square above 165.33. Normally when they break the inside day to the downside, I take that inside day high off my list. Maybe I'll keep it for tomorrow, but it's because I'm doing it out of bias. I like that they got option flow. Palantir, is this down more after hours right now? No, it's a bad print. It's a bad print in Palantir that's messing up my daily chart right here. It actually closed at like 1850, so there should be an okay, should be like a good-looking tail here in Palantir. But yeah, same thing with Palantir. I think Palantir looks decent with the tail that's actually there from the daily today. But I want this thing above. I want to be buying $19 in this thing. Clear level. It was also the inside day high. That's your trigger. These are momentum stocks. I want to buy momentum on them. I don't want to buy dips. But I think keep an eye on them for tomorrow for sure. All right, gang. It is 5 o'clock. It's Monday. It was a busy day for me today. I had a bunch of meetings and also was playing a lot of catch-up from last week. I still have some catch-up to play. Still got some emails to respond to. So I'm going to call it a great day today, team. Awesome start to the year. You guys are great. Bank of America, Ford, Tesla, Apple, the market. Things are off to the right foot for us as a team. Love to see it. Let's really focus on bringing everything to the next level here in 2022. I did like a little TikTok video this morning. I don't know if people saw it, but I'm not a believer in like New Year's resolutions. I don't think I've ever done a New Year's resolution in my entire life, because my entire thought process has always been, why do I need the new year to come to better myself? I can just choose to better myself any day at any time and work towards my goals. So why have a resolution? Most people make these resolutions specifically because it's this day, and then as a result, that's the reason why they end up not following through with them. With that said, though, it's a new year here. It's 2022. Everyone gets to start in some ways, with a fresh slate. I know for the most part, the back half of 2021 was a little tricky. I just want everyone to focus on trying to take it to the next level for yourself. Take it to the next level for yourself. Whether it's your own goals, your own trading goals, doing better journals, having more discipline for your trading. I'm going to work on trying to take ProDesk to the next level, but I need you guys to help me do that. I have some ideas that I thought of over the weekend that I want to try to implement to try to take what we're doing here in ProDesk and take it even to the next level. We had some phenomenal growth in our team over the course of the last 2 years. We had some really solid additions of teammates who are doing really well and are adding a lot of value, and I want everyone else to be able to do that also. I don't want anyone to ever feel shy in the virtual trading floor. I don't care if you've never bought a stock before in your life or if you've got 30 years of experience. Your communication makes the ProDesk VTF better. It helps you. It helps the other teammates that we have. So let's all work as a unit to taking our virtual trading floor to the next level, and then we will. We've been able to do it the last 2 years. We're going to continue to do it this year. Also, give me a subscribe to that Derrick the Trader YouTube, because I want to bring that to the next level too. And that's it. Have a great night, everybody. Welcome, Judy. Have a great night, everybody.